Okay, so here we are. Right, so yeah, good morning again, and today is Thursday, the 20th of January. As usual, we start off by having a look at the economic calendar and see if there are any reports that will be affecting the market we're interested in. We've got the German producer prices at 7, which could affect the euro-US dollar, which is the market we're focused on. And we've got the UK CBI trends at 11. That's a report again of medium importance, but that'll probably affect more the pound dollar. And then we've got this US existing home sales, again a report of medium importance, and the Philadelphia Fed report, all coming out at 3 p.m. But again, those are reports of medium importance. So there are reports to be aware of, but won't stop us from placing our trades and executing our trading plan. So we'll go on to the economic calendar. We'll go on to our markets. Start with the 1-year daily. Okay, so we'll start with the 1-year daily here. So we can see that the market has been trending sideways since about the 30th of November. It has been trending sideways. It hasn't got any pattern to it. So the plan was to draw a high over the highest point of the sideways trend, which was at that point before yesterday. So the high there was 13,498. And the low there, and the plan was to avoid trading within the sideways trend, and we're going to see if that high got tested and if it forms a resistance, but it was broken yesterday and formed a new high. So we now have to move our point to the new high of 13,538. And then we'll see if the market is able to break it. Or at least we'll see if it forms a resistance. But at the moment, there's no pattern to the market. It's trending sideways. We've put a mark there to see if that would eventually form a resistance in the market or not. And we'll see if this forms a support. So, but in the meantime, from a swing trading point of view, there are no clear swing trading opportunities, so we'll just wait and see. So that's from a swing trading point of view. So no clear swing trading opportunities. Now go to our day trading. So from a day trading point of view, as you can see, the market has broken the pivot point, and it's gone up. So it's now gone past the pivot point. So our next place to trade will be the first resistance. Obviously, if you'd bought before we came on, that's fine. Again, always remember the pivot points are set from midnight. So you can start trading anytime from midnight. You just have to decide the time you trade and when you trade. But don't forget, even if you start trading from midnight, if you lose out on your 3 consecutive trades before the morning, then you just have to stop trading. So your trading day starts from midnight. So if you decide to trade before the morning, you end up having 3 losses before the day starts, then you just have to stop trading. So you just decide when is best you want to start trading. You can either place 1 trade at midnight and then see what happens, and then place another one in the morning. But you decide how you trade and when you trade. Again, that's the beauty of being a trader. You are your own boss, so you decide how you want to play it. So if you bought the early hours of this morning, that's fine. If you haven't bought, then the next place you can buy will be if the market breaks the first resistance and top there at 13,537. Or you can sell just below the pivot point. You can see where the moving average is now. The moving average 50 is getting close to the pivot point. So if you sell just below the pivot point at 13,454, you can see your order will be just below the moving average 50. So it's perfectly fine to sell just below the pivot point because your order will be just below the moving average 50. So if you're not already in this trade, you can place a sell order there. And actually, if you're already in this trade, let's see, because if you had bought at 13,458 and 30 points is 13,488, you can see it's just about reached the 30-point mark. If you already bought and you're already in this buy trade, my advice would be to move your stop to the opening level, just so you're not risking any money on that trade, and then place a sell order just below the pivot point. So at least this buy trade will be protected, so you're not risking any money on that buy trade at the moment. If it keeps going up, that's fine. You can follow it up to your profit target. But if it comes down, if it takes you out from your buy trade, that's fine. You won't lose any money, but at least you will have a pending sell order just below the pivot point in case the market collapses. Okay, so that's the plan for today. Any questions on that? If you have any questions, you can either click the hand button or send the question through the question box. But the key, as always, with trading is always the same. It's trying to get yourself into a routine, have a trading plan, have a time you trade, have the market you trade. Money management, most important thing, because you know that regardless of what you're going to do, you are going to have losing trades. That's part and parcel of trading. You are going to have losing trades, but so long as you apply good money management, discipline, and consistency, and you do not overtrade, you will be successful overall, and that's the key. Don't complicate your trading. Don't overtrade. Trade in the direction of the trend, and stick to your plan. Okay, so if there are no questions, like, oh, let's see, there's a question here. There's a question here, is it better to trade currency pairs according to the session? Currency pairs are better because they are more profitable than other. I mean, you can trade indices, you can trade individual stocks, you can trade commodities. But I've found that it's very easy to, in terms of trying to use the 1 to 3 risk to reward ratio, you find that trading foreign exchange is more profitable. So I think, obviously, in terms of technical analysis and chart analysis, because about $4 trillion are traded a day on the foreign exchange market, it's a huge market, so volume is taken for granted. You don't even need to think about the volume when it comes to foreign exchange trading, because over $4 trillion are traded every day. So it's a huge market, and because of the vast volume, you find that it lends itself very well to technical analysis and chart analysis. So for all those reasons, in terms of, it's very good for chart analysis. It's very good in terms of moves in the market. It tends to trend more often than other markets, and you tend to have more moves in the market in terms of points than other markets. So I think foreign exchange is certainly much better, because the whole essence of the game is to try and capture as many points as you can in the market, at least a minimum of a risk of 1, 2, 3. And you can get that quite easily with foreign exchange trading. And the market tends to trend well compared to other ones. So I think for all those reasons, they're much better and easier to trade. Usually, if you have, excuse me, if you have a lot of money in your trading account and you want to trade other markets, you can. You just have to be aware of little points about certain other markets. For instance, you want to trade indices, you have to be aware of the market opening times of the particular index you're trading. If you're trading commodities, you have to be aware about the commodities market. But by and large, the trading plan and the basics are still the same for all of them. Regardless of the market you trade, the same rules still apply in terms of you have to have a plan, you trade in the direction of the trend, you have apply good money management and discipline. Kindly explain when the market forms a support and resistance and when this is tested. Yes, let me see if we can get any examples here. I'm going to try and look for an example. Let's see. I'm trying to find a good example of support and resistance. Let's see. It's much easier if you can see an example. Because it's very important that you get, okay, actually this is not a bad example here. So, okay, now this is what we mean. I'm using this as an example here. This is actually not a bad example. So you can see here where the market went up and it's come down here and made a low. Okay, let's follow it. Actually, this is a good example. So you can see it's made a low point here. So the low there is 15,969. 15,969. So when the market got there, that's the low at that point. So you can see the market went back up and it came close. Yep. But did not get there and then went up. And then you can see it's been going up. And then you can see here where it's reached that low point. And that's what you mean by it's tested it, because you can see despite the fact it went that low and then it went straight back up. So it means that's what we mean by it tested that low point and it held. So prior to that, this is just a low of the market. It's not a support. That's just a low. It's not a support until it gets tested and it holds, which it did here. It got tested there and it held. It held meaning that the market did not break through it. And usually, like I said, if it gets to about plus or minus 2 of that point, then it's regarded as testing it. It's not going to be exactly the same figure. So if you look there, the low there is 15,969. And the low there is 15,969. So more or less exactly the same. So you can see that got tested there and it held. So you can now call this the support of the market at that point. And then you can then decide you want to trade. You can decide that you would then sell if the market breaks it, and you can sell at 15,967. So it's at that point where the market got tested and it held and then went back up. then you say it's formed the support, then you can now use it to trade, saying you will now sell 2 points below that. But prior to that happening, you just say that's the low point of the market, is not a support till it gets tested. And then you can leave your order there. Let's see what happened. So you can see it got broken there. The support got broken there at 5 past midnight. And you can see the market has just been going down since then, when that support got broken. So that's what you mean by support, and you can see how it works. So it's very important, and I'm glad you asked that question. It's very important you understand how support. Again, it doesn't work all the time. It doesn't mean because it must always stress that. I must always stress that all these strategies, yes, they work, they're good, no, so long as you apply them well, but they do not work all the time. So it doesn't mean that you're going to get 100% success rate regardless of what strategy you use. So you still have to have your stop loss in place, you know, don't overtrade, and money management, because it's not guaranteed they're going to work all the time. But even if you lose money using this strategy, that's a good loss, because so long as you've identified the support, once the support forms, you can sell below it. If you lose out, that's fine. That's a good trade. So, but it doesn't work all the time. But that's an example of a support. And then the reverse is just true for the resistance. So the same thing as the resistance. You just get to high, wait for the high to get tested. If it then holds, then you can use it. So I hope that helps. Oh, brilliant. Okay. Any other questions? That's a very good question, because I think support and resistance are very important, because they're very good trading strategy to use, especially when the market starts trending sideways. Because when the market starts trending sideways, like we said before, I mean, it's a bit like here. I mean, this is the pound dollar, for instance. So you can see now it's trending sideways around the first support of the pivot points. And like I say, you don't trade within a sideways trend. So what I'll be doing is I'll put a line on the high at 15,959, and a low there of 15,991. So when the market starts going sideways, this is a way of protecting yourself. So you just try and avoid all that. So you just ignore the pivot points, because you don't want to trade within a sideways. Obviously, you can still buy at the pivot point there, because it's outside the sideways trend. But in the meantime, that's just the low of the sideways trend, and just a high. So until that gets tested before you say it's a support, until that gets tested before you can say it's a resistance. At this point, it's just a high and low. So you just avoid trading this market until you get clear opportunities.